Friday, November 1st. Market analysis, Stan Ehrlich. Good morning. 9:46 California time, middle of the trading day, from the traditional hours of 6:30 to 1 o'clock California time. I always start out with the stock market indexes and go to futures and sometimes go to seasonality or cycles, similar formations, oscillators, you name it. Been at this 53 years. I've used everything. All right. We have rolled over finally. I stuck to my guns as far as expecting a top to be developing over the last 2 or 3 weeks. Very frustrating. But now that the market has dropped off to new lows for a month or more in most indexes, I feel vindicated. Now, what happens next? We have a sharp, big crash yesterday, biggest in month plus, and support held. No surprise, we also got oversold, barely, but oversold. So having a little bounce today so far, around halfway up, maybe a little more of yesterday's down day, big down day, is not a surprise because of the oversold condition, which is not necessarily the case in the other indexes, but the E-mini did. So big deal. Rally to sell. I'm looking for a break during November, but basically I expect it to be only in the first week or so, because normally, historically, November and December are up months, creating some good strength upside follow through after the October lows. And by the way, ladies and gentlemen, I will start talking about the Santa Claus rally sometime soon. Maybe it'll take a few weeks, a month, but in general, very general, it is buying the stock market just before Christmas and selling out of your position or positions, plural, in the first part of January. That's the Santa Claus rally. But I have locked this down to a very short-term time frame. Historically, what time of day, on which days do you buy? And I'll tell you about that in the weeks or months, well before Christmas, of course, to come. So now, a rally, no big deal. Don't think it's the start of anything profound. Looking for new lows. And frankly, one or more of these support areas to the downside, I think, is going to be reached. But I'm not a bear. I'm looking for this downside correction in a longer term bull market to simply have a correction. Where is it going to go? How long is it going to take? And am I going to get buy signals when it starts to turn around to the upside? Or maybe not signals, but at least price action development that causes me to help you turn bullish at the right time. This bearish expectation took longer than usual, but it worked. Next chart is simply the 1 minute E-mini, minor lows for a little while. You can see that the market overnight basically hit the exact lows of yesterday and has rallied some. But I don't think it matters. Next chart, spider. There is a gap to close. Interesting. Today's high is right smack dab at yesterday's high and the beginning of the gap closure. So I am frankly expecting the spider, therefore the E-mini, of course, as well, to rally back up to the low of Wednesday. Period. But they don't always do that. Gaps are almost always closed, I keep saying, for years now. And sometimes they're closed like 80, 90+%, and they don't get closed completely. But the fact that we have a fairly large gap implies that there's a very good chance that we're going to pop up to close to and maybe a little higher, but in the ballpark of the low of Wednesday. Next chart. We're looking at probably a big sideways trading range in the SPY this morning. Really can't make much of a Much of it at the moment, except for downside breakouts, would be below the yellow zone, below 572, and an upside breakout to close the gap would be above the high of the day. Next chart is the QQQs, also a gap to close. I think that is just going to be adjusted very slightly to accommodate the high of yesterday, pull it down a little bit. That's good. So it hasn't quite been quite as strong as the other index we just looked at, and it hasn't reached the high of yesterday. But again, whether it closes the gap or not, and it's likely, I expect that to be a good selling point. And I am looking for lower lows and these colored zones and or yellow lines, which are various support reasons for various different reasons, to be tested. And at the lowest, maybe the low of early September. At this particular point, I'm doubting that we're going to see the August lows tested. I'm long-term bullish, short-term downside, reactionary, or bearish. Next. Okay, well, high, break, higher high, minor break, and going sideways. For this morning, obviously things still look up, but the fact that it's starting to weaken the momentum and hasn't made new highs at the moment implies maybe it's in the process of rolling over. And the NASDAQ also made new lows for the NASDAQ since October 8th, 3 weeks, not far from making new lows since September 19th, a month and a half. But we're rallying. It's a doji. Doesn't mean much. In my opinion, we're going to be rolling over and starting to move down with maybe a little bit more strength in the meantime. In the meantime means hours to maybe a day or two at the most. Next chart, NASDAQ. 1 minute. Maybe a little bit of a top formation here. Hard to tell. I don't see it, but it is starting to make minor new lows for a little while. And that's how things start. You know, there's always the high tick, there's always the low tick, but how do you get into the market close to, and it's pretty impossible, to get close to the low tick or the high tick for a major turnaround or even minor turnaround? That's very difficult to answer correctly. Next, YM, daily data, almost a bearish engulfing at the top, not quite, super close. And we've come down. This is a new low yesterday for a month and a half. And a bounce back up today, which did get higher than yesterday's high, but we're not oversold, although very, very close. And it was not a lower low today than yesterday, so therefore no bullish engulfing, no buy signal. And I think this is still just a bounce in a little bit longer term, week or so, not that much, of course, downside correction, and then up and up and up. Next, YM 1 minute, not doing much. And the Russell, major historical resistance, stopped the rally again, like in July, like in middle of September, and now the middle of October. So we're a new low today, bouncing at the moment. No reversals. No, RSI is neutral. I think it's going to make new lows very soon. And here is the 1 minute chart, breaking out of a very small head and shoulder top looking type of formation. But, you know, it's very tiny and it's only a few hours in duration. So even if it works properly, it's going to drive prices down to, I don't know, 2206. No big deal unless the formation is allowed, creating a turning point larger than the minimum downside objective, which happens frequently. I said minimum. So formations create turning points that are not necessarily going to stop at what they're supposed to get to, which is their minimum objectives. And here we go with bonds. I am super happy to tell you that both bonds and notes have fulfilled all of my expectations since the market formed a head and shoulder top and started to break out. I'll just say the beginning of October. So that's the last full month but I have been bearish, past tense, rightly so, and forecasted moves down to, at the lowest, this arrow, and we almost got there a couple of days ago. So I pretty much 99% fulfilled. Now, this is particularly profound on a long term, and I'm not used to making very long term predictions because they don't happen very often. And look at this. Shoulder October 22, little double bottom in the process. Shoulder March 23. So this is a double shoulder. There's your highest high before the bottom, which was a bullish ER buy signal at the very low of this market, now a year later. And we have another inside called inside shoulder, April of this year. And this could be, should be, I want it to be, I can't make it to be, but it looks like it is going to be the last shoulder low on a very large double shoulder, head and shoulder bottom, which took 2 years to form. If I'm right, ladies and gentlemen, you're looking at the beginning of a move that's going to go on for probably a year more, up to 150 and a half. Not trying to be too exact on a 1 year forecast, for Christ's sake. So around here, around this price, around this time, we should be, could be, it looks like we are forming this last shoulder. What the hell can I say? I can't take you a month from now into the future and show you that I'm going to be right or wrong. We'll see. But this is a profoundly important major bottom. If this fails, what's going to happen? Well, we're probably going to drop down to the inside shoulder low at 113 and maybe even drop down even more. Nobody is expecting interest rates to flatten out now and go back up even higher. The Fed is supposed to have a rate break or two before the end of the year. That's what they said was possible. We'll see. Now, one last comment about this. Remember, markets move on anticipation and reverse on realization. So why is, this is dumbfounding to me. Why are these things going down, rates going up, while everybody's expecting rates to go down? I just don't get that. Maybe somebody can help me with that. But anyway, my prediction's correct based on the way it's moving. That's the important thing. I read charts. So, new low in 10-year notes, oversold condition, and at the moment down 1920 on the day. All we have to do is to get back to higher on the day, and we've got a green bullish engulfing ER buy signal, but not at the moment. We've got an outside down day in oversold conditions. The timing is right. The price levels are approximately correct. So is the timing approximately correct for this last shoulder, just like bonds. No change of opinion on a long-term basis. We've got the same 2-year pattern. We've got a pattern that produces a 126.5 upside objective. Again, a year or two from now. Enough said about all that. Let's go to something else. Crude oil. Rallying back up, hitting a previous bull trend line from below. That's resistance. The high of the wick today, the high of the day. Perfect, right on that line. And now back down to almost unchanged. Not quite. Actually, a little lower on the day, it looks like. But how come the net change is showing higher? I don't get that. That's not quite right. But the current tick is lower than the previous close marker. Ninja. Next chart. Heating oil. We are a lot of political phone calls, so I'm just letting that pass. Heating oil had topped out with a bearish engulfing at the high of the rally, just great. We did have a great trade out of that. We're now rallying back up. There is the potential of a bottom formation developing here. I don't see it yet, but I do see the support levels holding and the beginning of a rally, not from new low ground, but from higher than the previous low, which was oversold. And we have a very nice broad 1 year plus downward sliding channel. which we tested the low of pretty accurately on September 11th, 9/11. So here we go. It depends on how this resistance area is handled. If we cannot get through it and start to slip back down again, then we're going to see new lows to the trend. But if we can start closing above 2.3, yeah, it begins to bend the prediction a little bit to the upside. And if we start to get above the high of this bearish engulfing signal at 2.42, well, that does change the picture quite a bit. Let's see what happens. Next is the natural gas. New low close, closing below previous lows, all bearish. Not oversold yet. Looks like this is going to make it into new low ground more than just today and current quotes. Looking for lower levels. Gold missed having a bearish engulfing yesterday by a squeak. The high is so close to the higher high, but it didn't happen. Therefore, no red bearish engulfing like we had a few days ago. Remember, these reversals are not necessarily every time the high of a rally or let me find a green one. Yeah, the low of a move, and they are many times the exact low of a significant move or, part of the topping out or bottoming out process. So I haven't been able to separate that out and figure out how to use that information, but it's definitely correct. So not always do I hit the highest high day or lowest low, which you've seen many times, but I am often part of the topping out or bottoming out. So I think there's a chance something is happening here that is very bearish on gold. I just can't pin it down. If you can close below 27.21, then I'd be a little bit more adamant about it coming down a lot more. Silver already has done that. Higher high, damn near a bearish engulfing, missing it by a tick, I think. And now a lower low yesterday and today, calming down a little bit. After all, yesterday was a big down day, exhausting itself a little bit. So in support, I think it's going to break it, and my next expectation is down to about 30. Bearish engulfing in platinum. What can I say? Working great. Now, I did change the kicker here this morning. It was higher, but I wanted to change my trailing buy stop to get out of my short. I call it kicker because that's the name of the number that makes it go faster or slower. And as long as you're not out of the trade, you have the ability to do so, although I do not necessarily recommend doing it unless you know how to manipulate the strategy, which, everybody learns over a little bit of time. So now I'm locking in a very nice profit, and I'm still short, a little higher on the day at the moment. Doji doesn't mean too much, and we're going to wait. I'm looking for lower levels, maybe quite a bit lower. That was a really great reversal, so bearish. Next, copper's locked between a rock and a hard spot. You know what this almost looks like? Watch carefully here. Even though there's rallies and breaks, it's in the yellow zone. So that's containing it. Secondly, the closing prices for the last 6 days, including today, have almost been the same. That is extremely unusual for any market. Stock, commodity, forex, crypto, I don't care. Doesn't happen very often. So what's going on? I don't know. I'm a technician. I have to wait here. Okay, we were short from a signal at the top and another extra signal a few days later. Got out a few days ago, and it settled down and going sideways. Let's wait and see what happens. Now, in soybeans, we do have a minor double bottom here. We're currently trading a fraction lower on the day. I think there's a chance we're bottoming out. And if that's true, is there any kind of longer-term bullish statement I can make? Not really at this particular point in time. But if the double bottom, little tiny one here at 2 weeks, works correctly, it'll push it up to about, close to this rally high here. And in a few days, that'll also be very close to this major bear trend line, which is the top of a downward sliding channel. Now, this is a big channel. If that's broken, meaning if we start moving up above 1076 in a week or two, 1070-ish, that's a major long-term breakout. So this little tiny pattern might lead to something much more important longer term, but I'm not saying that's going to happen. I'm saying I see it as a possibility. You don't trade that kind of thing. So I have no signal. I'm waiting. Came close to a bullish engulfing ER signal, but we didn't get oversold. So the outside up day on Wednesday is just simply a candlestick bullish engulfing, which is nice. It's friendly. It's a little bit bullish. But I love the ones that are oversold or overbought at the same time and generate my major long-term buy signals like this green, good signal there on the left, like this green on the bottom there, and many more. All right, next, oil, bean oil. Today, I've got a brand new formation outline for you. I'm not super happy about the way it's developed, but I think there's enough evidence that this is looking good and acting, most importantly, acting correctly. I'm claiming these two broad lows here in May and June are a shoulder. They look like a double shoulder. I'm treating them at the moment as if it was a single shoulder. A high afterwards, normal, pivot point, dropped all the way down to a new low, the head of the formation. No buy signal at the bottom, but a few days later we did. Worked okay. And up we go, topped out. A couple of sell signals worked out fine. A lot of green in here. That's what you want to see is green, of course. And then a low. Now, here's the thing. If you drew the neckline in thinking this was a head and shoulder bottom, although this last shoulder low is a single and very short in time frame, not quite looking at all like the left-hand side here. But if you accept that for a small shoulder on the right, then how is it acting when it went through the neckline? Perfect. It rushed up to it and through it yesterday, closed very strong, new highs for months. Classic. And a pretty strong follow through today. Classic. Now, if that's all true, the upside objective is going to be 54 in soybean oil, which has major ramifications for other grains, especially beans, because it'll probably drag the other grains up. Beans and oil, I meant. So meal is really starting something very interesting here. I also have to point out that meal is one of the only grains that never did make a lower low for a year or two earlier. I don't know. I'm kind of glad I'm talking about this at this point, which again is maybe a little premature, but I can't help it. It's doing exactly what a head and shoulder should do. I simply don't like the left-hand shoulder being kind of a double, maybe, maybe not, and the right-hand shoulder single. Otherwise, perfect. Next, soybean meal at the moment, dropping down to new lows sharply, getting quite oversold. So that's a reason to believe it's about to turn back up again. Super oversold. We're in a support area, so that adds to the likelihood of it starting to turn back up. We're almost low and last. I wouldn't buy it yet, but I certainly would be watching very closely soybean meal for buy signals of any sort that historically have had some credibility to the technique. Next, corn, higher on the day, coming back into this resistance area again. And I've drawn in the head and shoulder bottom in corn. Again, I don't like it 100%. I mean, I've seen plenty. In 53 years, how many of these damn things do you think I've seen? Oh, I don't know, 1,000, maybe more. Sometimes they're very, very small, like an hour or two on a 1-minute chart. Sometimes they're 10 years in size on the US dollar index that I started talking about way back when Bruce Babcock, for you older guys, or maybe remember him, I forgot what his market letter was, But Bruce, unfortunately, had some major illnesses and passed away at a young age. It's disappointing. Very, very sad. Friend of mine. And I wrote an article for his market letter at that time. And it worked, but it took years. So anyway, head and shoulder bottom, not the best I've seen. Neckline up here. So we have way up to go just in order to get a start on this formation. And if it works correctly in the end, we're going to go to 484 and a half or higher. Next, wheat. Just can't justify the pattern. It just doesn't work no matter what kind of lines I draw in there. Necklines, shoulder depiction, timing points, just doesn't fit with me very well at all. So all I can say is minor support on the dip, turning around a little bit, not oversold, not overbought, I'm waiting. And here we go with hogs and cattle. This is cattle, almost a sell signal, so close a few days ago. Bearish engulfing, yes. They're generally bearish engulfing, whether they correlate with anything else or not. And we're down sharply. So I'm looking for lower levels on the cattle, 182, probably down to 181, and maybe even lower. Next, hogs. Today's high is a new high for the trend completely. We are currently trading a little higher on the day. But if this fails, and it could very quickly at the end of the day, for example, on a Friday, in overbought condition, and there's a gap down here to close. So you know what I say about gaps. They're like a black hole in space. They tend to suck the price action back into the gap. Mostly, usually, almost always to close the gap. Sometimes partial closure, but not 100%. But that's not the issue. It's going to pull it down into this ballpark. And if that happens, particularly today, you're going to make a low lower than yesterday's low and have a red bearish engulfing sell signal. We already had one a few days ago that didn't work. But again, these are sometimes parts of topping out process. Not necessarily, but I love it when they are the highest high or lowest low. Okay, the E-mini is now pulling back a little bit more. And here we are on the 1 minute. Okay, fine. Good, good. I like that. Spider doesn't really care. Q's, that's a little late. And on the NASDAQ, okay, but it's not that great. You guys have a great weekend and profitable trading to you.